Hi there, welcome to Kneppy Invest. We have one trading day left in quarterly reporting season for October, and that is October the 31st, the Monday. So I've decided to record this video today on October the 30th because I have a little bit of spare time on this day, and I don't want to leave it to the Monday because I will be going through quite a few quarterly reports on the day because most companies on the ASX that are required to release quarterly reports like to leave it to the last minute. They are procrastinators. There will be a few companies who wait to November the 1st, but they have to release their quarterly report before opening of trading on the Tuesday, or otherwise, if they don't, they will be suspended from trading their shares. Anyway, my previous Appendix 4C or September quarter report video was done on Big Tin Can. Share price of that company rose 25% on the back of their quarter report, so the market liked it. So I thought I'll just shift a little or change gears a little bit here and focus on a company who released a quarter report and the market absolutely hated it. And that was Whispir. In fact, the share price of this company was down 35% in 3 days. I think it took the market 3 days to really digest the quarterly report from this company. And even though the majority of that fall was on the first day, we saw significant falls on the Thursday and the Friday. So I have done a few videos on this company in the past. In fact, my previous video was titled Show Me the Money because this company is operating cash flow negative. They remain operating cash flow negative. And unfortunately for Whispir, the cash inflows or the cash receipts are falling. And there is a reason behind that. And not only that, this company is more operating cash flow negative than they have been for quite a while. And it was a bad few days for Whispir and its shareholders because Whispir released their Appendix 4C on the 26th of October and share price fell 24.4% on the day from 78 cents to 59 cents. Then over the next two trading days, the share price of this company fell another 6.8% on the Thursday 27th and then another 9% on the Friday the 28th. So overall, the share price of this company fell about 35%. The other thing to take into account here is also the trading was done on fairly large volume. That's always a negative when you see 3 significant down days for a company. Now, I would expect, without even looking at anything, the shares of this company are oversold. And I do expect a pretty good day on the ASX on the Monday. So I wouldn't be surprised to see Whispir share price rise between 10 and 15%. And if it's on fairly low volume, that would be the very definition of a dead cat bounce. So looking forward just to see what happens with Whispir share price on October 31st. And more than likely, by the time you are watching this, because I should be releasing this video after trading has closed on October 31st. So you can either laugh at me or applaud me because I do expect a nice little rebound in Whispir share price on October 31st. So what does Whispir do? They are a cloud-based communications platform. I think they call themselves or suggest they are all about intelligence communications or something like that. And I've just gone to their website. I'm just going to quote something from their website in regards to how they help the government. So Whispir's centralized communication platform allows local government officials and agencies to engage citizens with secure email, two-way SMS messages, voice memos, public alerts, video, and more. So that is the sort of thing that Whispir is doing. And remember, during COVID-19, during lockdowns, we might have been getting a lot of SMS messages from the government, and Whispir would have helped in that. In fact, this company was benefited by COVID-19, and we'll talk about that during the rest of this video. And it's also a reason why the revenue and the cash receipts of this company has dropped for 4 consecutive quarters. Now, the company was founded in 2002. However, the website says 2001. So we'll say between 2001 and 2002, and listed on the ASX June 2019. So about 8 months before COVID-19 hit our planet. The CEO and co-founder of the company is Jeremy Wells. He has a 10.5% stake in the company, so a little bit of skin in the game there. And 2 of the largest shareholders, and these largest shareholders actually changed. So last time it was Pi Funds and Regal Funds. Now the 2 largest shareholders in Whispir are Australian Super with 7% and Forager Funds with 6%. Now in August 2020, the market cap of Whispir was 516 million. That's what that was at a share price of $4.97. Now, at a share price of 50 cents, the market cap of this company is only 59 million. So if you are excited buying this company at a market cap of $516 million, you must be absolutely thrilled that you can buy this company now at a valuation of only 59 million. And the ticker code for this company is WSP. Now, I probably should mention that for full disclosure purposes, I am not a shareholder of this company. So keep that in mind. If you think I'm being a little bit too not anti-biased, but a little bit too anti against this company. Anyway, let's have a look at their financial or their Appendix 4Cs. And before we have a look at the most recent September quarter, I'm going to go back 1 year ago just to see how this company has grown or this company hasn't grown over the past year. So 1 year ago, they had receipts for customers, 16.3 million, and they were operating cash flow negative by $2.9 million. Not only that, they spent $1.9 million on intellectual property. I think that might be capitalized research and development. I could be completely wrong with that because I'm not an accountant, but that's what I have read in the past. And they also spent $230,000 on capital expenditure. So even though they were operating cash flow negative by $2.9 million, they were actually free cash flow negative or burning through significant more cash than that 2.9. And that's why cash on hand for this company fell from 49.3 million to 43.9 million. So even at this point in time, they did have plenty of cash to play with. And the only way that would change if they burn through a lot of cash and the cash on hand significantly fall. So let's have a look to see if the cash on hand has significantly fallen over the past year. And oh yes, it has fallen a lot. So it's fallen from that 43 million odd all the way down to 17.1 million. Not only that, during this one quarter, there was $9 million burned in cash, with the cash on hand falling from 26 million to 17 million. Not only that, receipts down 1.8 million from 1 year ago all the way down to 14.4 million. And the other thing I always look at here is how has their spending increased or decreased over the past year. For instance, advertising and marketing costs are actually down 400,000. So they're starting to spend less on that, but product manufacturing operating costs up 100,000, staff costs up 2 million. So that is one area they could look at. Maybe this company is bloated with too many staff. And I think that is one area many of these tech companies can look at to decrease their costs. And because costs have increased $2 million over the past year, and administration costs have increased $300,000 over this last year, that means with the cash receipts down 1.8 million, this company was operating cash flow negative by $7.2 million in this one quarter. And then you add that intellectual property of 1.9 million, and that's how this company burned through $9 million of cash in the one quarter. Now, I'm just going to point out a couple of interesting aspects from their commentary that I did find quite intriguing in regards to why, or the company's reasons why, cash receipts have fallen over the last 4 quarters, and some interesting objectives for the company for the second half of the financial year 23. And I would consider these objectives to be quite bold, particularly where the company finds itself right now. Now, back up to reasons why cash receipts have fallen over the past 4 quarters. In fact, 15% down from the previous quarter, the June quarter, and 11.5% down from the previous corresponding period, which was the September quarter, the first quarter of financial year 22. So the company's reasoning behind the decrease in receipts is important. We want to try to understand why the receipts have been dropping and why we might expect a bounce in receipts in the future. So this drop in receipts reflects the reduction in COVID-19 related revenues compared with the previous corresponding period, and the impact of seasonality, with the first quarter typically a softer quarter of the year. Now we can compare the cash receipts not to last year, but to 2 years ago. And if we compare the cash receipts 2 years ago, this company is growing at a significant rate. So cash receipts are up 38% against the same quarter 2 years ago, demonstrating that the business is still experiencing strong growth. Although I don't really know if you can compare your financial numbers this year to 2 years ago and say you're experiencing strong growth. I'm not sure how long you have to go back before you just say, well, that growth phase has come to an end. If you're just looking at the past year, that growth phase has come to an end. So I'm going to give the company a bit of a doubt here. And those reasons why the cash receipts have fallen, they're legitimate reasons. And I would expect a bounce in cash receipts over the next few quarters. In fact, the company expects that when you look at their objectives for financial year 23, particularly the second half of financial year 23, where they think they will have or show positive EBITDA. And the reasons behind that include cash receipts are expected to ramp up. So cash receipts are expected to start growing again, while operating cash payments should remain relatively steady. So the spending of this company should go sideways, not up, as cash receipts start to go up again. So the company, all this means the company is confident the business remains sufficiently funded. And remember, based off the cash burn in the previous quarter, they only have 2 quarters of cash remaining. So they think they have sufficient funds to reach its stated objective of positive EBITDA during the second half of financial year 23. I think that is a bold objective, and it's going to be very interesting, very intriguing if they can reach that objective, because if they can, perhaps this company right now is undervalued. Now, one interesting thing I did find is a bit of a shift in focus of this company during the past 2 quarters. So if we go back to the third quarter of financial year 22, which was only 2 quarters ago, this company had this nice little graph on this the left-hand side. We just showed you the growth in annual recurring revenue, 28.2% per year annual during that time period. And every single quarter, the annual recurring revenue has been higher than the previous quarter. But we didn't see this sort of graph in the presentation or their commentary section of the Appendix 4C. All we had was this little bit of commentary. And it's interesting that the reason why they didn't include this particular graph on the left is because annual recurring revenue actually dropped. So yes, it dropped. So this might be the first quarter that annual recurring revenue actually did drop from the previous quarter. And they did have an explanation behind this. And this could be one of the reasons why the share price of this company was absolutely hammered. So annual recurring revenue at the end of quarter is 62 million, down from 65.4 million in the previous quarter. So that is a significant drop in annual recurring revenue quarter on quarter. The decline in annual recurring revenue is attributed to the ANZ region, where transactional revenues from the state health departments have not continued at the rate the company had previously expected. So I'm not sure exactly why, but the company was wrong with some of their expectations. And that is the reason why we didn't see that sort of graph on the left-hand side in the most recent quarterly report. Now onto the cash receipts history for Whispir. And this is something I always look at for all companies that released Appendix 4Cs or 5Bs on a quarterly basis, but only those companies that actually do have cash receipts. A plethora of mining companies releasing Appendix 5Bs have absolutely zero receipts because they're all explorers. And if you're a mining exploring company, you have no money coming in. In fact, you have a lot of money going out, and that's why you keep having to go back to the market to raise capital. But that's the whole reason behind equity markets, is because if you are able to list on the ASX or on the Canadian Stock Exchange, you have greater access to capital. So it actually works. And that's one of the reasons why there is a massive amount of mining explorers on the ASX and the Canadian Stock Exchange, because we are resource-rich countries. Anyway, rant over. Receipts history for Whispir. It looked pretty good up until the December quarter 2021. In fact, massive increase in receipts in that particular quarter. But we generally were seeing receipts growing from this company, increasing from $8.3 million in the June quarter of 2019, the first quarter they were an ASX listed company, all the way to a high of 25.4 million in the December quarter of financial year 2022. Unfortunately, receipts have dropped from 25.4 million all the way down to 14.4 million. In fact, we've seen 3 consecutive drops in receipts for this company. Now, based off the commentary, I would expect receipts to start growing again. But just because the company expects that doesn't mean it's going to be happening. And I think the market is a little bit wary about this company right now. So now could be a time to take a position in this company if you love the future of Whispir, simply because there is potential the market is overreacting. And if this company can become EBITDA positive, if this company can become cash flow positive in the next few quarters, a markup of whatever it is, $50 million or so, might be really cheap. Now onto the charts for Whispir, and pretty negative. In fact, we are right now at an all-time low for Whispir's share price. Even though the company has only been a listed company on the ASX for 3 years, it's not really good news when the share price is an all-time low. In fact, the majority, if not every single shareholder in this company, is now in the red, and the value of their holdings are down significantly, more than likely significantly from when they bought in, because a lot of shareholders probably bought in at much higher share price. And in fact, the share price of this company has been decreasing ever since that share price high way back in August 2020. So well-defined downtrend since then, and there's no end in sight to this downtrend in this company's share price. Not only that, the share price fell through a support level at around about 75 cents. The reason that is a support level is if we go back to COVID-19, that was the low for this company's share price. And then we saw the share price of this company bounce off 75 cents in June. So it did look like that level was or held firm and really reinforced the strength of that support level. Unfortunately, a lot of times when you see support levels broken, it's going to be on strength. And unfortunately for Whispir and its shareholders, the catalyst for the break in that support level at 75 cents was this Appendix 4C. Now, this is the daily chart for Whispir going back to March 2021, and this is a classic downtrend. So if you have someone who doesn't understand what a downtrend or uptrend is, all you have to do is show this particular chart, and if they don't understand that this is a share price in a downtrend, then that person has absolutely no help. There's only one instance since March 2021 where the downtrend in Whispir share price was at threat of being broken. That was in January of this year. You can see a sudden shift in share price. In fact, the share price rose from about $1.75 to $2.88 in about 1 month. Now, whenever I see that sort of rise in share price over a very short period of time, and not on very large volume either, I'm always a little bit wary. So even though that looked like it could have been a breakout in the share price, it failed because of lack of conviction in the market, even though the share price did rise quite quickly. I prefer share price to go sideways before it breaks out, consolidate for like 6 months, 1 year before we see that breakout. And the reason I prefer that is because you don't see a lot of resistance. When that share price took off in January 2022, there was a lot of resistance, a lot of shareholders who bought at higher prices in the past who saw the opportunity to sell. And because there wasn't really large volume, that's why that potential breakout failed in the end. The other noticeable thing about this particular chart and all sort of downtrends is whenever the share price gets to, say, the 75 or the 100-day moving average, you might include the 200-day moving average, but whenever the share price for Whispir gets in between that 75 and 100-day moving average, so I have 4 moving averages here, 100, 75, 50, and 25, and it's pretty noticeable that the 75 and 100 moving averages for Whispir are pretty strong resistance levels. And every time the share price of this company gets to those levels, those moving averages, we see the share price start to pull back again. So that's one thing I'll be looking forward in the future for Whispir. But with a lot of negative sentiment around this company, with the company releasing a pretty bad Appendix 4C, with the market absolutely fed up with this company, with pretty big volume coming in the last 3 trading days, I think it's going to be a long time before now or after now that we're going to see a potential uptrend, if ever, for Whispir's share price. That's all I have for Whispir's September quarter Appendix 4C for financial year 23. Share price down 35% in 3 days. So the market absolutely hated this particular quarter report from Whispir, even though the company's management is a little bit bullish about the rest of financial year 23. In fact, they expect to be EBITDA positive, but the market quite doesn't believe that rhetoric from the management at this point in time. So if you have any thoughts about Whispir, if you believe in this company, I'd love to hear your thoughts on why you believe in the future of Whispir. So just leave your thoughts in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.